Good evening and welcome to Flash News TV. I'm Linda Roberts. Tonight we delve into the latest economic developments that are shaking the global markets. Global investors are bracing for further turmoil as new economic data from the United States raises fears of an impending recession. The past week has seen a significant downturn in stock markets across Europe, Asia, and the United States, driven by alarming job numbers and disappointing performances from major tech companies. The U.S. reported only 114,000 new jobs in July, a figure much lower than the anticipated 175,000. This unexpected slowdown has spooked investors, sending shockwaves through global markets. The unemployment rate also climbed to a three-year high of 4.3%, further fueling concerns about the health of the world's largest economy. In addition to the weak job data, manufacturing activity in the U.S. hit an 8-month low in July, with new orders declining significantly. These troubling indicators have led to a broad sell-off in stock markets, affecting not only the U.S. but also Europe and Asia. Major tech firms, including Amazon, Alphabet, and Intel, reported disappointing results, contributing to the market's volatility. On Friday, the Nasdaq dropped 0.4%, entering correction territory, while Japanese equities had their worst day since the onset of the COVID-19 pandemic, with the Nikkei 225 index plummeting by 5/8. The turmoil didn't stop there. Middle Eastern stocks also fell on Sunday amidst ongoing regional tensions. The fear of a global recession has led to a dramatic decrease in oil prices, with Brent crude falling from nearly $88 to below $78 per barrel in the past month. As we look ahead, key economic data scheduled for release this week will be crucial in determining the future trajectory of the markets. In the U.S., figures for the services sector and the unemployed analysts will be watching these numbers closely to assess the vulnerability of the U.S. economy to a recession. Chris Weston from Pepperstone highlighted that global markets are at a critical juncture. He noted, but what really matters now is whether money managers and traders feel sentiment has become too pessimistic, or if this deleveraging and risk aversion manifests into even higher volatility and drawdown. James S. Tiobin from Ocean Park Asset Management commented, "We're witnessing the fallout from the curse of high expectations. So much had been invested around the scenario of a soft landing that anything suggesting otherwise is difficult to handle." Art Hogan from B. Riley Wealth provided a slightly more optimistic view, suggesting that the markets might be overreacting. He said, "This isn't a Category 3 hurricane, but we are seeing how markets react to signs that the economy is normalizing after turning hot in the first half of this year." So far this year, investors had grown accustomed to cooling inflation and gradually slowing employment, setting the scene for the Federal Reserve to begin trimming interest rates gradually. This optimism had driven significant gains in the stock market, with the S&P 500 up by 12% and the tech-focused Nasdaq gaining nearly 12%. However, recent developments have reversed some of these gains. On Friday, the Nasdaq's significant drop marked a stark contrast to its previous highs. In London, the FTSE 100 index fell by over 120 points, while Europe's main stock indices also saw substantial declines. France's CAC 40 and Germany's DAX were both down, reflecting broader concerns about the global economy. Amidst the sell-offs, investors have flocked to safe haven assets, pushing gold to a new record high. The US dollar weakened, which in turn boosted the value of the pound and the euro. This week, we'll be watching financial results from major companies closely. In the US, Uber, Airbnb, Hilton International, and Coca-Cola are among the big names reporting. Across the Atlantic, European bellwether stocks like Generali and Deutsche Telekom will also release their earnings. As these events unfold, we'll keep you updated on the latest developments and their implications for the global economy. Stay tuned to Flash News TV for continuous coverage and expert analysis. I'm Linda Roberts, and thank you for joining us.